summarizing the taxation advice and the key concept to Alice and Halbert. And it is very important for Alice and Halbert to comply with the Internal Revenue Commissions. Since both couple Alice and Halbert generate income from the wages and the salary and business income, this income is subject to Income Tax Act prior to Section 65E of the Income Tax Act. Alright, Alice derive both income salary and the non-income salary. Non-income salary such as income from the business or dividend, interest, and rent. Particularly, this non-salary income is assessed for tax on the annual basis. Each individual is assessed separately for both purposes, for tax purposes. These are not joint assessment of the income of husband and the wife, unlike in any other certain countries. As every salaries and the business owners knows that it is impossible to avoid tax for that matter. Okay, the tax-free threshold minimum is 10,000 kina, or 22% of the income tax. And the tax will be paid according to the wages and the salary they earn. They call it payee or pay as you earn. Okay. Therefore, let's firstly look at Alice wages and the salary and the business income. Okay. Alice income derived from the telecommunication firm of about 50,000 per annum. This income is subject to the income tax at a standard tax rate applicable to individual in Papua New Guinea. Okay, she had an accessible benefit of 3,500 kina paid by telecommunication firm for her children's schooling is considered as allowable benefit. All right, remember, tax value of allowable and the benefit for education fee for children of employee is nil. Okay, while resident taxpayers are entitled to a tax rebate of tax paid to a non-government schools, high schools or primary school, whether in Papua New Guinea or overseas, for the rebate is limited to the lesser of 25% of the net education expenses incurred, or 750 kina per dependent student child. In this case, she may claim for a total of 1,700 kina as a rebate. Let's look at Alice's business income or non-salary income. Alice generates income of about 55,000 kina from a hairdressing business. This business income will be subject to income tax at a standard tax rate for business in Papua New Guinea. She had an opening and the closing stock will be used to calculate the cost of goods sold. 400 kina minus 200 kina equals 200 kina, which will be added onto total taxable income. Term deposit interest of 100 kina is to be also added onto a total taxable income. 1,300 kina minus 1,200 kina equals 100 kina. Okay, she paid 4,000 kina for renting a shop is considered as a deductible business expenses. Okay, the bookkeeping expenses or services. Okay, she paid 6,000 kina as also considered as deductible business expenses and will reduce the taxable income from her business income. However, the rate she paid to Internal Revenue Commission is not in line with the terms and the regulations. Therefore, I encourage you to make some adjustment, increase the wages up to minimum up to 500 kina or more. If you are not in compliance with the terms and the condition, and it is a clear violations of the Income Tax Act, they may sue you for such action or likely to be paid penalties. All right, let's look at Albert's income and the transaction incurred during the financial year. Albert has got legal business consultant. Total income he received for the year of about 300,000 kina and additional income of 20,000 kina. Both income generated are subject to the income tax at a standard tax rate for business in Papua New Guinea. While this income of 20,000 kina will be included in the financial year of 2025 because it was not yet received. It was considered as is a receivable amount which was carried forward to the next financial year. Okay, let's look at 30,000 kina paid for superannuation for a staff members is considered as a deductible business expense. Okay, well, ensure to deduct their wages and the salary income tax for each employees. It is tax free to an employee provided with not more than 15% of an employee income. However, when an employee receives a payout, it is assessable. Okay, let's look at Albert purchasing new computer for his office of about 15,000 kina, which will be capitalized and depreciated over the useful life of the asset. Okay, alright, quality expenses was about 15,000 kina. You minus with the depreciation. Okay, therefore you have to find out the depreciation. Okay, you multiply 15,000 kina by 30%, multiply by 10 over the 12 months of the year, which will give you 3,750 kina, minus 15 kina will give you 11,250 kina, will be considered as the written down value as of 31st of the month of 12, 2024. Therefore, depreciation is allowable in respect of asset which are included in properties prior to section 73 of the 2. Alright, okay, let's look at 800 kina received from the selling of the whole computer will be treated as the capital gain or additional income which will be added into total taxable income. Okay, Albert spent 500 kina during the year is considered as a client's entertainment expenses, are generally considered as deductible business expenses, subject to certain limitation and recognition. Since they are the dependent of 2 kids, then dependent rebates are recognitions of the domestic responsibilities of taxpayers to provide a measure of relief for those taxpayers. In order to claim a rebate for dependent, a salary and a wages declaration form must be obtained from the employer. Should be completed. If husband and the wife are both working, they may not claim rebates for the same dependent. Either one may claim or they may share in claiming rebate. Okay, to gain a maximum benefit, the person on the highest income should claim for the dependents. Okay, when a taxpayer is claiming a tax rebate for work-related expenses or for any other expenditure incurred during the financial year, they must submit a tax return at the end of the tax year prior to divisions 18D, section 213A to 213F. Okay, remember, an employer who failed to remit the amount of tax deduction is subject to a penalty of 20% of the amount not remitted, plus the additional tax of the 20% per annum. All right, and also an employer who failed to make a deduction is liable. Therefore, I encourage you to comply with the Internal Revenue Commissioner in every financial year and also to keep your financial record up to date. Thank you very much. My ID number is 2014 16 73. Thank you very much.